This is All In Mortgage Breaking News. Good evening, everybody. It's Joe Rychowski here of the All In Mortgage team, and we've got breaking news. Just came off the presses here. What happened with the Fed meeting that wrapped up today and Chairman Powell's speech today. Our phones have been blowing up. We're getting calls, text messages, emails. We got questions on answering rates. So let's dig right into it. So yes, you heard it correctly. The Fed did announce today that they're looking at 3 rate hikes in 2022, possibly 2 to 3 in 2023, and another 2 in 2024. And 12 out of the, I think it's 12 out of 18 committee members indicated that, and they were even thinking probably 3 in 2023. And each time you're looking at about a 0.25% rate increase. Now, the questions that we've got, where we think the rates are going to fall in 2022. Some of this increase has already been baked in, as you've seen rates creep up a little bit as the economy's gotten better. We're still in the pandemic, but kind of at the tail end of it. Yes, there's the Omicron variant, and you have unemployment numbers that are looking good. The GDP looks great. However, I think the unemployment numbers are a little bit skewed. I just saw a couple articles out there saying that people are, not going back to work. They're still out there looking for jobs. So I think the numbers skewed a little bit. But we definitely believe the rates are probably in the spring, when they look for the first increase in April, probably going to fall somewhere about 3.8 to 4.0%. And then the next increase is probably in the low 4s, 4.1 to 4.2. And probably by the end of the year into 2023, I think we're looking at about 4.5. And this is on a conventional 30-year fix. That's kind of the benchmark. But the Fed did say they're also tapering off the bond purchasing, cutting that in half. So they have taken an aggressive stance here. I do trust the Fed. However, I do disagree with 3 rate hikes in 2022. I think we've got to look and see what's going to happen over the next month here with the retail sector, see what's going to happen with the housing market. As we've all seen, inventory is very, very low. Housing prices are still up there. I mean, obviously inflation's still there. Prices are going up. So what's going to happen? Yes, there are increases in salary. People are seeing higher salary and raises, which is great. But I really think the Fed is going to really have to continue to monitor this to see what's going to transpire. And they did say that, but I think it is a little aggressive with 3 rate hikes in 2023 for sure. And then also they're talking next year, 3 rate hikes as well. So that's the big question. That's where we think rates are going to be. And so right now, if you're a potential home buyer, you're looking out there. I know it's frustrating, but now is the time to find that home of yours, because rates are still definitely low. They're still in the 3s. You potentially could even get something in the high 2s if you work the loan out with us and we could figure something out, maybe some credit, maybe buy down the rate a little bit. There are a lot of options still out there. And especially many of you are still out there looking to refinance. You haven't jumped off the cliff yet to actually do a refinance. And a lot of you are concerned with closing costs. There's always going to be closing costs in any kind of refinance transaction. You've got title fees, recording fees. If you escrow, you're going to have to roll those back into the new loan. So there's always some sort of closing costs there. However, if we price the rate right, might be able to get you some lender credit to help with those closing costs. And if you worked with us before, we might have a lender where we can do what's called netting the escrows, where we reduce the payoff with the escrow balance you have there, and then basically debit you on the other side for the new escrows. So it kind of lowers the payoff, and then you can actually debit the new escrows there. So it's kind of a wash. So that could definitely help. So there's a lot of opportunities out there for you to still refinance. And I think I saw somewhere is like 2 million homes that still have not refinanced. So now's the time to do it. I definitely think the market's going to continue to rally with this Fed news over the next couple days. I think sometime next week, probably the 22nd, 23rd, as we get closer to Christmas, people wind down for the year, and probably into mid-January, I think we're going to see a market rally with the rates. I think they're going to drop a little bit. Treasury is probably going to come back down a little bit to 1.36 to 1.38 right now. I think it's at 1.46. So we still have some time, I think, to do refinances for those of you who haven't. So give us a call, let us know. George, myself, Brian, and the team are happy to help, and we're excited to see what 2022 is going to bring. We'll do another segment here probably towards the end of the year with what our predictions are, what the outlook's going to be. But again, if you're a home buyer, now's the time to get off the fence and do that. And if you're a realtor, you have people, have them talk to us. We can get them pre-approved within same day, within a couple hours, and we can get a same day full underwriting approval, and we can move extremely quickly on a loan. We can still close loans right now. If you go to our website, allinmortgage.com, we're averaging about 17.3 days from start to clear to close. So we're doing very, very well in our turn times. So we can get things done quickly. So if you're worried about rates, again, I wouldn't hit the panic button here. The Fed did say they're going to continue to monitor things. It's always good to check back in with us. Our website will have updated information. We're always posting about what the Fed is doing, what our thoughts are, and we look forward to hearing from you, and we welcome your feedback. So if there are any other topics as well, let us know, and we will keep in touch with everybody. This is our breaking news, and thank you for watching and listening, and have a great day, everybody.
This has been All In Mortgage Breaking News. Thank you for watching.